The one conversation that really has struck me is the commercialization of APIs. Every bank in Europe was mandated to build an API for PSD2 compliance, but not all institutions actually embraced the approach in that change of technology. And the interesting thing about tackling open banking, which is a compliance requirement, and turning it into a business strategy, is all based on the unification of the tech across all of the P&Ls, and APIs are the mechanism to do that. So it's not a straightforward, here's an obvious use case that will give us ROI on the build, but it's a series of different types of use cases that are both internal and external that allow an institution to truly monetize the compliance build. And I think that that's a particular strategy that hasn't yet been embraced fully by the market. You can see sort of this asymmetric approach. And I think the really convincing argument is turning an entire suite of APIs that enable data access, data exchange. In fact, the mobility of data at speed and scale to the advantage of both the institution and the customer that they're serving, and turning it into a viable business proposition in more than just PSD2 ways is a really interesting approach. And that's been one conversation I've been particularly keen to hear the insights on. The conversation that we've had here today, at least that I've been involved in, is around empowering open finance, making sure that data under open finance actually delivers on its promises. And for me, that's truly important because we're at the verge of really understanding what that open finance framework is going to look like, but also understanding the blending of non-payment data with payment data and transactional data that enhances the insights that we can provide to the consumer, to the small business about their position, their cash positioning, their cash and credit needs, but also how they can move that information around that also enables the movement of their money in a much more efficient way. The fact is we haven't a formal market yet for open finance. It's being explored in terms of the regulatory context, and we're still awaiting some direction from the regulators. But the promise of it is today, it's immediate. And with small extensions into different data verticals and blending savings and credit and investment and wealth and pensions and insurance with payment data, we start to see these really supercharged use cases that already exist in market. For example, variable recurrent payments or dynamic recurring payments. It's an interesting proposition, but when you start to blend savings insights or debt and liability and credit insights, you can provide a much more potent and effective payment remedy that allows it to respond to the customer's actual needs and their requirements in terms of where they are financially, not just the payment itself. That's just one immediate thing. And it's right there, it's within the cusp of our grasp in the next 6 months. So talking about the extension of data verticals, bringing that into open banking space, supercharging it, and building that bridge to true open finance, we're right there. So the conversation is important because we really are supposed to take the next step, and it's a matter of time. Do we wait and delay for 18 months to see what comes out from the regulatory side of things, or do we take some market initiative and push it forward with the governance and the supervision and the blessing of the regulators as we experiment? So it's a market making moment that we're at, and I think it's really crucial to understand what the art of the possible looks like within the current regulatory environment.